Right, what's up guys? This video is going to be my most important video to date on ICT concepts. I'm going to be going from A to Z. This video is completely all-encompassing, from higher time frame narratives to entering on lower time frames. I'm going to show you how to harness the higher time frames to your advantage when entering ICT concept style entries on the lower time frames. A lot of you guys are a bit lost at the moment. You're entering blindly on the lower time frames, and this is affecting your win rate significantly, all right? The problem is, when you're trying to enter solely on the lower time frames, waiting for a sweep of the Asia highs or lows, or waiting for a sweep of London and Asia highs if you're trading in New York, the problem is that you are just trading the lower time frames. You have no idea what's happening on the higher time frames. You could be in the middle of nowhere. It's like driving your car, only being able to see 5 meters in front of you. Say there's a huge mist in front of you and you cannot see where you're going. You're going to potentially just drive straight off a cliff, okay? You do not know how far you can go, how far you can hold your trade, and how far you need to go before you stop and take profit. This video is going to show you exactly how you can determine where to hold your trades for, additionally, which trades you should and shouldn't take, whether your bias should be long or short, bullish or bearish. It's going to show you exactly how to filter out those trades that you'll notice didn't work when you were backtesting. So again, a lot of you guys have been asking me for this complete package, and I'm giving it to you all in this video. Right, so just before we hop into the video, and for those of you trading prop firms, my favorite prop firm is Blue Guardian right now. Blue Guardian allows you to trade with unlimited time limits. You do not need to rush. They don't want you to rush. They want talented traders that take their time when they are trading. They also have the Guardian Protector, which stops you from hitting your max daily loss, which is something that I believe is very, very valuable. So if you go into the description below, I have a 10% discount code that you can use to get an account with Blue Guardian. Right, so let's crack on with this video. Right, so this is what we're going to be going over. We're going to be going over higher time frame swing structure. Like I say, guys, you need to know where the market is on the higher time frames. Otherwise, you're just going to be lost. You're going to be entering blindly on the lower time frame. And that's what most of you guys are doing right now. And that's why you're struggling so much to get entries that are profitable. That being said, you will still be profitable because these concepts really work. But when you pair them with the higher time frame narrative like this, it becomes unbelievably profitable. So when it comes to the higher time frame, we're looking at swing structure, okay? And then we need to take into account changes of character. We need to take into account whether price is premium or discount, all right? And then we need to take into account fair value gaps as well that are happening on the higher time frame that can affect your lower time frame entries. So for lower time frame entries, we're looking for a sweep of the Asia range, which we use the Asia range indicator to mark out, which makes it really easy. We are then going to be looking at how to enter the market, and then very critically, we're going to look at entries and how to exit the market correctly. You need to know before you take a trade where you're going to enter and where you're going to exit. And knowing the higher time frame narrative will allow you to swing these trades for 1 to 32, 1 to 40, 1 to 50. It all depends on how much space there is in the market. And knowing the higher time frames allows you to know how much space you have to work with. Just before we continue with the video, I just want to remind you guys to please head down below and give the channel a subscribe if you haven't already. Most of you aren't already subscribed to this channel that are watching this right now. So please do go down below and subscribe, and make sure to leave a comment below letting me know what videos you want to see in the future or what you thought about this video. Thank you very much, guys. Let's continue with the video. Let's get right into it. The first thing we're going to do on higher time frame is look at higher time frame swing structure. So the first thing I'm going to do is we're going to look at a diagram first. So as I'm sure we all know, price, if it's bullish, creates higher highs and higher lows, right? So price will break the highs, and then what does it do? It retraces, okay? Once the market breaks the highs, it will retrace into an area of discount. Do you see how market has come below this 50% mark? All right. So in order to do that, I just use the GAN box, which you can use with these exact settings right here. Okay, we're looking at the 0.5% and the 0 and the 1. So that will allow you to have a note of where price currently is. If price is up here, are we going to go for longs? Okay, so price comes up, it breaks structure, right? Are we going to start looking for longs? No, we're not going to start looking for longs when it's here, because we're still in this premium zone. Okay, people aren't wanting to push the market higher here. Okay, so if price retraces into this zone, yes, we're going to start looking for longs. So what happens is when price breaks structure here on the higher time frame, we're going to start to look for signs that price is going to move down. We're not going to be looking to get long, because when price breaks structure, what does it do? It retraces. So when we see that price on the higher time frame has broken structure like so, we're going to start to look for changes of character on the higher time frames. All right, so this is crucial. So the market will move like this. Okay, so this is a very simple diagram of what the market does. What price will do is this. This is a slightly more realistic diagram of what the market will do. Price is going to break structure, okay, and then it's going to change character. So price will have these little pullbacks, okay. Now this little pullback is not an indication that price is going to come back necessarily, okay. So if we look here, price broke, it had a little pullback, okay, then it came up, took the liquidity of that pullback, and then changed character. Once price breaks this and changes character, guess what? We're now looking for price to come lower. So if we draw our premium and discount, if I see price has now changed character, what am I expecting? I'm expecting price to come down lower into the discounted zones so we can go longer. So if we're looking at the sweep of the Asia highs or lows on the lower time frame, if we're up here and we've just changed character on the 4 hour, what am I going to be looking at? I'm going to be looking at getting short so we can take price down here. But in the back of my head as well, I know that price is not long-term going down. Price is just retracing right now so that it can get into a discounted zone so that it can buy, okay, so that we can go higher. So when you trade in line with this, it is a lot more probable. Now, when price comes down here and we're in, for example, a zone of a fair value gap on the higher time frame, what am I thinking? I'm thinking, hey, we're in a discounted zone, so longs are much more probable. But also, guess what? When price, the pattern will continue. When price retraces into a discounted zone, what does it have to do? It has to come and take out these highs, okay? Price has to come out and take these highs. So what can I do? I can take price for a little bit, maybe 1 to 2, which is what I show in this video. You take partials off because, hey, we don't know, price could come a little lower first still. So I hope you guys can see the power in this strategy and how you can use the higher time frames to trade in line with the way the market is moving, okay? We do not want to be taking short positions when we are here. Why? Because we're in a discounted area, all right? And then we will also be taking higher time frame fair value gaps into play, okay? So for example, if you guys don't know what a fair value gap is, you can watch the video again in the description below. That will show you how to mark out fair value gaps. You'll also see how I do it in this video, but it's quite basic ICT stuff. So there could be a fair value gap right here, and that's what causes market to move this way. It's not a necessity, okay? It's not part of the rules, but you need to take them into account, okay? So for example, if we have a fair value gap that price is sitting in right here, we would be a bit wary about taking price short when it's in the zone, okay? Because price would be tapping into here. Yes, it's changed character, but what price is more than likely going to do is come up a little more before continuing down. This change of character just signals the start of the pullback phase. So I'm sure you guys know how the market moves. Again, there's the expansion phase and the pullback phase, right? So that is the higher time frame. We're going to look at examples of this happening in the real markets very shortly. Now, you guys need to go and have a look at what fair value gaps. Again, there's going to be a link in the description below that shows you how to spot it. I've also created a short video. If you go to my short, it will show you how to look at fair value gaps and how to spot them in the market. Again, you cannot just trade all fair value gaps and changes of character. And again, this is showing you that. So your lower time frames are simple. The first thing we have to do is set up the Asia range indicator. So just go to settings. All you're going to do is leave Asia range on, and you're going to leave Asia range color, obviously fill is on, and you can change the colors to whatever you want. Mine is blue currently, okay? Blue and gray, okay? Then for inputs, you leave everything as is, right? This already has the time zones correct, okay? It's all set to EST time, right? So you can use any time zone you want when you're trading this way. So I have it set to Johannesburg because I'm in South Africa. So it just works for me. You can obviously use UTC -4 for New York, or, you know, if you're in the Eastern Standard Time Zone, or you can use GMT or UTC, whatever, if you are in the UK. So it's all up to you. This does not matter. This Asian range indicator will automatically have everything you want. All you do is switch off all of this, okay? All of this, except for labels and price, values and status line, and full Asian range color and Asian range session background color. That's all you have on, and inputs stay exactly the same. So what's gonna happen is this. You're gonna see that the Asian range session is going to be marked out by a box. Price is going to move around in this box, okay? And then it's going to take out one side, okay? And this is the liquidity that you want to see. A lot of people are starting to get long at this point here, okay? People are starting to buy here. But what the market is going to generally do is do this. It's going to take them out, come down even lower, and either continue lower, or it's going to take out both sides and continue higher, okay? Now, what we are looking for specifically is this. Price will range in this box. Price will then break out, okay? It's then going to change character, which is going to look something like this. Again, guys, fractal structure is very important. So what I recommend is going to the video where I map out fractal structure. The link is in the description. I show you how to map out fractal structure. And practice it, because it's very important. It's mechanical, so you will always know when fractal structure and a fractal change of character happens. So price will break out of this box again on the 1 minute time frame, and we use the 4 hour time frame for our higher time frame analysis. So price breaks out of this box, okay? It then changes character, which is a pullback, takes the liquidity, okay, here, and then it breaks the low that took the liquidity, like so. And then price will either continue lower and continue all the way to where, for example, let's say this is a bullish example. So it would be the opposite of this, essentially. So we would be looking for price to do this and break this, and then continue higher. We would want to hold this trade. This is the higher time frame, okay? This is somewhere in here that this is happening, okay? On the lower time frames, this is happening, for instance, here. We are going to want to hold this until it reaches this point. So what we do is we take a partial, okay? We will enter here on the entry, which I will show you in a second. We'll take partials at 1 to 2, okay, and go break even. We're then going to hold all the way to this point here on the 4 hour, where price breaks structure. Because guess what? When price breaks structure here and pulls back, it has to complete the pattern and break structure. So we hold until we get to that point on the 4 hour. which can be huge, okay? So we take partials at 1 to 2, and we hold for that higher time frame zone, okay? So let's get down to the entry. So we've got where entries start to become valid is when price has swept the Asia lows or the Asia highs. So what we're looking for, once price sweeps this box, okay? Once price sweeps the liquidity made in Asia, once price sweeps it like so, we are looking for a change of character to the upside like so. So price will pull back a little, come down, take the liquidity, then break structure to the upside like so. And we want to see something specific here. We want to see an aggressive move to the upside with displacement, which is basically just a nice move to the upside. And then we're looking for a fair value gap to form, which we will then enter on like so. We will enter on the fair value gap and take it up. Okay, and depending on where we are in the market, we're either going to just take it for a 1 to 2. We're either going to just take it for a 1 to 2, because if the market is bearish right now, we're not trying to swing this for a 1 to 30 trade. We're just taking a 1 to 2, because we know that price is going to turn around at any point now. Okay, we know that market is in a pullback phase. The market is pulling back. It's actually bearish at the moment, and the market's just pulling back so that to facilitate the move downwards. Okay, so but if the market is in our favor and the higher time frame looks like this, we can literally swing this to like all the way, like it goes really high, and I'll show you in the example. So it's really mind-blowing how crazy this is, and I really hope that you guys can see that. Like, knowing where price is on these higher time frames is a game changer. And I'm going to show you guys a few other tricks as well when we get into this example. So right here, if we see this happening on the 1 minute and we are right here, what are we going to do? We're going to literally hop in on our entry model, which I just showed you above, on the 1 minute time frame. Our stop loss is going to be tiny in comparison, so you're going to literally have a small stop loss, and we're going to be swinging this for all the way up here. We're going to get like 1 to 20s. What we're going to do at 1 to 2, we're going to take off our partials. So take off 50%, you can take off 25%. I recommend you backtest this to figure out what works best for your psychology and your lifestyle in general. Okay, take off your partials at 1 to 2. Go break even, and then you just set your take profit at this level and leave it. You're going to leave it, maybe it'll take 1 day, 2 days, whatever. They do hit, okay? Now, and I'll show you how to determine, which direction the market is going. So in this scenario, you would take the trade long, okay? What if we're up here? What if we were up here and this scenario presents itself, okay? This scenario, price breaks out of the Asian range and gives us a change of character. If we are here in price, we are not going to be taking long positions. Why? Because we've just changed character bearish, and we are busy pulling back into a discounted zone where price is going to then buy. Then you can look for longs when you're in this zone. But up here, you're in a premium zone. People are not looking to buy here, they're looking to sell, and we've just had a change of character. Additionally, if we look left, and price has done this, okay? Let's say price looks like this. And there's a fair value gap over here. We're definitely not looking for longs, okay? Because price has just bounced off of a fair value gap, okay? And this is what's facilitating your pullback into this area to then go long. I hope you guys make sense of this. Now, when you see how I mark this up on the chart, it's going to make a lot more sense for you. So if we are in this area, we're definitely not going to be looking to go long. What price is more than likely going to do is sweep both sides. So say this box is our range, okay? Price is ranging in this box, okay? Price then breaks out of the box, okay? It breaks out in our zone, okay, in the London kill zone. it then gives our change of character. Are we going to take it long? No, we're not, because right, price is bearish. We're in a pullback phase. So what price is going to likely do is take out both sides, give you a change of character here, and then you can take it down. And guess what? You can take it down into the discounted zone. So if we're here, we can take it down until we get down here. Okay. Now, what I recommend is being more cautious, because again, the higher time frame swing structure is bullish. So take your 1 to 2, maybe take off more, so like 75%, then you can swing the rest until you get into a lower time frame that is discounted. Okay, and you can even target a fair value gap that is on the lower time frame. All right, but you need to be more conservative, and that's what this strategy does. It shows you what's higher probability and what's lower probability. It also shows you where to place your expectations on the market and where to hold your profits to. Right, so if we look at the higher time frame, we can see that price is creating lower lows, lower highs. Okay, again, this is where price breaks the low of this, and so that's where the swing is. Price pulls back here and it breaks the lows right here. Now we get price coming up and it changes bullish. So this bullish change to the upside is where we are right now. Now, again, guys, when you are mapping out higher time frame structure, it's very important to know when price breaks, it has to be a candle body close below the previous low. Okay, so here is where it broke, and this is where I now classify this as the high and this as the low. Okay, so this is this new swing, right? So here it pulls back and we wait for price to break the low. That wick here does not break the low, so we do not classify this as the swing yet. Price then breaks here, okay, and has a little pullback before continuing lower. You can mark this on as a pullback as well. So you can mark it as like so, but it does not actually matter. And then you can see price continues and breaks this high here, which was supposed to be respected if we continued bearish, but now it breaks. So we are now shifting bullish. Okay, so when we shift bullish like this, are we going to be looking for bullish trades when it looks like this? The answer is actually no. You're not looking for bullish trades, because when you break structure, what happens? The market pulls back. Okay, so when market breaks structure, the market pulls back. So we're waiting for a pullback to happen. And so in this area, okay, we're waiting for a pullback to happen so that price can come into a discounted area here, price to come into this discounted area and continue upward. Okay, and so now we're starting to look to take these trades into the discounted zone short, not long, because here is no man's land. All right, so this is what we're looking at. We go into the 1 minute now. With that in mind, we're not blind, we're not trading blindly. So we have a look here on the 1 minute, and we're looking for price to liquidate the Asian highs, which it does right here. So Asian highs are liquidated. Now we are looking for our change of character. Okay, we're looking for price to change character. And of course, to do that, we're going to use fractal structure, which, if you guys don't know fractal structure, there is a link down below to a video that will show you how to map fractal structure. Okay, so this was the last low that did not break the previous candle's high. And so once this breaks, this is now the fractal low. Now, we actually have a fractal change of character right here. This candle does not break this candle's high, okay, which means that that is the fractal low, okay, and it was now broken. We do not, however, have a fair value gap. Now we have a fair value gap, and this is the highest fair value gap on the extremity, which is our rule. Now we're looking to go short. Why? Because on the 4-hour time frame, we've just broken structure to the upside. However, we are very wary that swing structure is now bullish, okay? we are looking for shorts right now, but we're not looking to take them really far, okay? We're looking to potentially take them only to this discounted zone when you're looking at shorts, because the market is now starting to look like it might pull back, okay? So when we're looking, once we get into this zone down here, shorts are now very low probability. We're looking at longs now to get to there, okay? So let's hop back to the 1 minute with that in mind, knowing that this is our discounted zone on the 4 hour. We're then looking to get short, but we are looking to be less aggressive or more aggressive with our take profits. We're looking to get out of the position more quickly. So we're going to enter the short position here, stops just above, and we're going to target 1 to 2. Now what I recommend is when you get that 1 to 2, you take off like 75%, because again, it's more probable that we just get a short move and then market continues, because we're in a swing, we're in a bullish swing structure, okay? Yes, the market's pulling back, but overall we are bullish, right? Short term we are bearish, but long term we are bullish, okay? So we hop into this trade and we get our 1 to 2. We would then go break even, take off, let's say 75%. Now what you can do with the rest is now target this discounted zone, okay? So we target the discounted zone and we get taken out at break even, okay? So we would have bagged 75% at this point. Now, again, if price comes down here and sweeps, we're not going to look at longs because we know that price is busy pulling back, okay? So again, this keeps you from getting into trades that are not beneficial for you. So let's have a look at the following day. So as you can see, price has broken structure once again, and it's pulled back into a discounted zone, okay? So price has now just broken structure. We changed character up here, and then we continued to get into a discounted zone so we can purchase up again. Now, what do we expect price to do? We expect price to take out these highs, right? We expect price to continue this pattern. So what do? We look to take it long all the way up to here, of course. So we hop onto the 1 minute and we look for our Asia sweep, basically. And whoops. Okay, so we're waiting for price to sweep. It's actually swept a little bit here, but it does not break this high. So again, our bias is long, okay? So price breaks out. We're looking for the change of character, okay? No change of character here. Again, our change of character is the last candle that did not break the last candle's high. That becomes our fractal high. Once the fractal high is broken, we have a change of character, okay? And again, if you guys are struggling with fractals and fractal structure, go to the video in the description below and you'll learn to do it there. So what happens here? We have a fractal breaker structure, okay? Because this candle breaks the previous candle's low. This candle here does not. So this becomes our fractal high, which then gets broken by this candle. And that is our change of character. However, there is no fair value gap here. Perhaps on the lower time frames, but no, there is none. And so now we have a fair value gap where we can trade right here. Okay? So we would enter right here with our stops just below. Okay? Just like that. So now we are in this trade, and what are we going to do? Let's look at the 4 hour. Let's look at what's happening on the 4 hour. Again, if I show you guys this, look here. If I move this, whoops, let's do this. If I move this, what are we going to do? Okay, price is bearish, breaking structure, breaking structure. Now price is bullish. It just broke structure to the upside and we're in a discounted zone. So what do we expect price to do? We expect price to finish this and break the structure to the upside and continue like so, right? So And we also know that price could also just have a small reaction like so. Okay, come lower, then do that. So what we do is we take partials at 1 to 2, set break even. If price breaks us even, goes lower, we can still try and get in that and go low and go longer. Okay, so with that in mind, okay, we know we're shooting for the stars on this one because we have everything lined up. The higher time frame is lined up with the lower time frame. So let's hop down to the lower time frame once again. We've entered this trade. Now we're taking our partials at 1 to 2. Okay, and we're going to take 50% off, 25 or 50%, it's up to you. Okay, because it depends on how high probability. This is very high probability because we're in a discounted zone. We're lined up with high time frame structure. Okay, and we've had a significant move to the downside, and we've had a nice displacement here that broke fractal structure. Okay, so we're in this trade now. And guess what? It doesn't work out. However, it's depending on you, right? So you could have just made it. You could have just made it, and then it could have taken you out, right? So let's say we took this as a full loss, even though most of you, I'm sure, would have been break even at this point. Let's have a look at what happens next. We continue lower, and this here is now a change of character. So we've taken a loss here. And also, you guys think I only show the wins. Well, I don't. So we've taken a loss here. And here we've continued lower. We've taken the lows once again. So that means we're valid for an entry. Okay. So we've taken the lows, taken more liquidity, and now we're looking for the change of character. So this here did not break the previous candle's low. So this is the high. Okay, and the high was taken. So now we're looking for our fair value gap. There is none here because this just got filled. Okay. Is there a fair value gap here? There is a very small fair value gap here. Okay. So we can actually technically take this as a fair value gap. Okay. You can either have it here or here, but I will have it at the bottom. And there we are tagged in. Again, you could have had it here, but I suggest always being safe. And I'm also not going to trade in hindsight and just say it here because I know it doesn't come down here. You're always going to want to put your stops at the low, okay? And you target 1 to 2, okay? Then you go break even once you hit that 2, and then you can take 25% off or 50% off, up to you. Then we are targeting all the way at the swing high, okay, which is 1 to 18, okay. So let's see what happens. I'm going to move up to the 15 minute so that it's a bit faster. Right. So we pull back a little. We are still expecting price to take out the highs, okay? Actually, this isn't the high. Whoops. So if you look here on the 4 hour, this is the swing high, of course. This would just be the internal high. Again, like I show you on here, we are looking for, we're looking for this to be broken, right? We're looking for this to be broken. So let's see what happens. And we take out the highs for a 1 to 26 risk reward trade. Okay. So that, guys, is how you frame up a 1 to 26 risk reward trade by using the higher time frames to confluence with your lower time frames. When you are trading in line with your higher time frames, you have highly probable scenarios just like this. You know how to trade this part here. You know how to trade if we are here. Okay, if we are here, we're looking to play the pullback. If we are here, we're looking to play the longs and go all the way to the break of structure. But we still take a little bit of partials off at 1 to 2. But we know that the market has already finished its pullback and that we're looking to go long. Same with here, okay? When price has broken structure, we know it's going to pull back a little, okay? But we're not looking to take it all the way up here because if you look back, we are still bearish, okay? So that is why knowing the higher time frames and confluencing that with your lower time frame entries will make you extremely profitable at trading ICT concepts. So guys, that's it for today. If you guys enjoyed this video, please do subscribe down below and let me know what you thought about the video in the comments. Cheers everybody. Thank you very much for watching.